best thing you can do is know from the day you start your business that at some point, someday, there will be an exit. And the reason isn't because you're going to get bored of it or you're going to hate it. I don't mean that at all. This is your passion. But what it does mean is you're addressing something that a lot of people aren't even aware of. And that is that, yeah, you're making income every year, and that's great. But what you're also doing is building much more value than what you're getting from this business month in and month out.
Hey, y'all, and welcome to the Cash Flow Podcast, where we're going to talk about everything related to the money in your small business. I'm your host, Pam, and without further ado, we're going to jump right into our episode.
Here we are. Welcome back to Cash Flow Podcast, where we are covering our 3 Things to Do series here from Podcast Movement. And we have a new question now from my friend across the way. He has had a successful run with his businesses and ready to exit it or ready to think about exiting it. And I'm going to go through 3 things to do in preparation for exiting his company. Let me first talk about what exiting means. Exiting is really when somebody says, hey, I'm ready to sell this business and move on to the next thing. Exits can take 1,000 different forms. But in this particular case, you're asking, hey, I want to sell it outright. I don't want to have anything to do with it going forward. I just want to sell it and move on. I've loved it, but I'm ready for the next thing. I want to take this money and go invest it in another thing. And that's what we're going to address this time. But what I'm going to cover, the 3 things to do are all the same, no matter where you are in your business and what you intend to do for an exit. Because we're always talking about the value of your business to somebody else. Okay, that's what an exit is. An exit is selling the value of your business to somebody else in one form or another. So what are 3 things to do? Number 1, think about this early. Okay. The best thing you can do is know from the day you start your business that at some point, someday, there will be an exit. And the reason isn't because you're going to get bored of it or you're going to hate it. I don't mean that at all. This is your passion. But what it does mean is you're addressing something that a lot of people aren't even aware of. And that is that, yeah, you're making income every year, and that's great. But what you're also doing is building much more value than what you're getting from this business month in and month out, year in and year out. And let me just give you an example. I worked originally with somebody when I first started my entrepreneurial work, and she had an idea and she had no money at first. We got some investors. And we started making money very quickly. The business was making, $5 million, then $7 million, and $12 million. And translate this into thousands or tens of thousands if you want to. The story's still the same. The point was, after she built that business for a period of time, all of a sudden it wasn't just worth that to her now. This thing, if she wanted to sell it on that last day, was going to be worth $70 or $80 million. And that's money that a lot of entrepreneurs are not aware of is out there for them. It's out there in a long-term stream of money if they want to keep the business forever. But if they decide they want to sell it, they can accelerate getting that cash. Instead of waiting 5 years to run the business and make that much money, I can sell it today and get it all right now. Okay? That's what an exit is. So as early as you start your business, start thinking about this. Thing 1 is think about it early. And what goes with thing 1 when I say think about early is get your financials in order. And I know that sounds lectury coming from a CFO and self-serving, but it's not. Here's the thing. When you go to sell your company, the very first thing that people are going to ask for is your financials. And they're going to ask for 3 years of financials. And they're going to want them to be in a way that they can look at them very quickly and know and have confidence that whatever questions they ask are going to be thoroughly supported by somebody who can explain where the numbers came from. Okay. And as your business grows, that gets more and more complicated. You need to have a bookkeeper and they need to have your books in order for up to 3 years before you sell your business. And here's the deal with that. Every time that a potential buyer asks you a question about your financials and you can't answer it, or it turns out to be an incorrect number on the financials, is 2, 3, or 4x in value that you're going to lose in your sale. You lose negotiating room because they cannot now have confidence in what they're looking at. If they can have confidence in what they're looking at, then they cannot argue about the price you're putting on your business, not from that end. But there is a massive discount to what you're going to get when you go to sell this business if you don't have those books very strongly in order. And let me tell you, selling your business is a proctological exam. Like it or not, they are going to come in there and they are going to look at everything with a scope. And anytime they find a weakness, anytime they find something that doesn't support the story that you're telling them, you lose ground in the negotiations. I'm in a couple of these right now, and I'll tell you what, with the solid financials, they try to poke at stuff because they want negotiating room, and there is nothing that can be poked at. Every question they ask, we have the answer to, and therefore we are completely maintaining our negotiating position. There may be other things that discount or hurt us in negotiations, but it is not going to be the financials. And I will tell you that the financials is the biggest thing that will hurt you. So get your books in order. If you're just starting a business, start with your books in order. Get a bookkeeper who knows what they're doing and understands accounting. And I promise you this will pay off 10, 20, 30x what you're spending to get those books in order. Okay, so that's thing number one. Start early and get your books in order. What's thing number two? Know who you want to sell to. So here's the thing. There are a lot of different reasons to sell your business and a lot of different people who might be interested in buying it, quite honestly. So they're all called fancy names, but I'm not going to use the fancy names. I'm just going to talk about the different types of people who may want to buy your business. One is somebody who's doing a roll-up of a lot of similar businesses. They've decided they just want to own 8 of these types of businesses, frankly. One is potentially somebody who wants to, who already has a big business in this space and really wants to get you out of the way because you're a nuisance. So they're going to pay probably a nice premium to buy you. Another one is a strategic buyer. They call it a strategic buyer who has 90% who will be able to do what you do a lot cheaper because they have some volume and they have some perspective. You may decide that it's more important to you to sell to somebody who really wants to take care of the business the way you've taken care of it. This is your baby. You've nurtured this thing for however long, so you may have some ground rules. I am only selling to a buyer who's going to keep my employees, who is going to maintain my HR policies and maintain the quality of my product. That's all within your power to decide. And the one thing I would tell you is don't let anybody talk you out of why and how you want to sell your business. So that's thing two. Thing one, get your books in order. Thing two, think about who you might want to sell to and what kind of things you want to make a condition of that sale. And finally, what is thing three? Get somebody to help you. And this isn't just a CFO. You certainly should have somebody who understands your finances inside and out and can talk about them the same way you talk about your business. So when you talk about your business to a potential buyer, the CFO or the finance person you have there can articulate the same thing and show the numbers to support your story. And when they show those numbers and when the potential buyer pokes at them, they have the support to support them so that there's no question about them. But the second person you really need to have is an investment banker. These or a business broker, investment banker. Do your due diligence here and only work with one that you know has worked with somebody you know or has come very well referred to you. Is these people are going to make or break you. They're going to make money on the sale of your business, but they will go find the buyers. They will help package it up the best way to go present it to those buyers. And they will make sure that everything that your CFO and your legal folks and your internal people have is show ready, is ready for these potential buyers based on how you define them. It makes it so much easier. Now, that's not to say if you know somebody that wants to buy your business and they're all ready to pitch you and you don't have to go through this whole, I got to find buyers thing, then leave that part out. Just do your deal and get your money. But if you're going to look for the best buyer out there to buy what you're trying to sell, get an investment broker or investment banker to help you. They've put a ton of services into doing that. What they do is they usually charge an upfront fee depending on the size of the business and how much work it'll be to get it ready to go. Again, a good reason to have your financials in order. That's less that they have to do, but then they'll take a percent of the deal. So you just up your price a little higher to make sure you cover their percentage. Okay. And the third person, you definitely want to have a lawyer working on this because any contract that you do, you absolutely want to make sure all the terms and conditions cover your butt, don't make you carry any liability longer than you have to, and that they protect you. And then last but not least, you want to have a tax accountant because how these deals settle will determine how much you keep. And if you don't do it with a tax accountant in mind, it often can come down to very literally you eat up 30, 40, 50% of what you make on that deal goes to the tax man. So financial person to really understand your financials, make sure they're in order. An investment banker or broker, unless you know the person who wants to buy your business, definitely a lawyer and definitely a tax accountant. Those are the four things you want to make sure you have in your court. You want a team on board helping you sell this business so that it brings you the most wealth possible in the end. All right. So you're ready to exit your business. What are the three things you need to do? Number one, start early, get your financials in order. Number two, know who you want to sell to and what you want the conditions of that sale to be. And number three, get your team put together. That is the three things to do when you're ready to exit your business. Hope you have a great day. This is Pam from Podcast Movement.
I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.